All right, let's talk about the home improvement war. We're talking Home Depot versus Lowe's. And look, this is way more than just lumber and paint. This whole industry, it's like a pulse check for the entire economy. So today, we are going to break down their 2025 battle plans piece by piece to figure out who's really set up to win. Okay, so how do we know all this? Well, our intel for this entire breakdown comes straight from an in-depth 2025 report by HDIN Research. These guys have done the heavy lifting, the deep financial and strategic dive, and we're here to unpack all their key findings for you. And this right here is really the heart of the matter. You've got high interest rates that have slammed the brakes on the housing market, right? It's basically frozen solid. So the game is totally changed. The big question is, if nobody's moving, how on earth do these two giants fight for every last dollar when the pie itself is shrinking? So here's the game plan. We're going to run them through a 5-round gauntlet. First, the housing freeze. Then the all-out battle for the pro customer. After that, we'll look at the AI and automation race, their supply chain defenses, and finally, the verdict on who's ready for the big economic pivot. All right, Section 1. Let's talk about this 2025 housing freeze. This isn't just a slowdown, folks. It's pretty much an industry-wide gridlock. So what's the deal? Well, both companies are saying the same thing. These stubbornly high interest rates have basically put golden handcuffs on homeowners. I mean, think about it. Giving up a 3% mortgage for a 7% one? No way. So people are staying put. And that completely freezes up the real estate market that usually kicks off all those big, expensive renovation projects. And, that forces a huge shift in their strategy. When your big ticket sales growth just goes flat, you have to pivot. So the focus completely shifts away from those massive dream kitchen remodels and lands squarely on the small-scale essential stuff, the repairs and maintenance that you just can't ignore. Okay, so this leads us directly to the single most important battleground in this new world. The casual DIYer, the weekend warrior, they're pulling back. So the whole war for growth, for profit, now hinges on one customer, the professional contractor, the pro. They're everything right now. And how do you win them over? Well, you go on a massive shopping spree. Both Home Depot and Lowe's have been throwing billions, literally billions of dollars at acquiring specialty companies that serve these pros directly. We're talking about a very lucrative, very loyal customer base. But they're not just buying the same stuff. You can see their strategies are totally different. Home Depot went absolutely huge, dropping almost $24 billion to basically own the outdoor trades. Roofing, landscaping, pools, you name it. Lowe's, on the other hand, was a bit more focused. They spent about $10 billion to really secure their territory inside the home, things like drywall and interior finishes. Okay, and this is where it gets really interesting, especially when you look at the bottom line. After spending all that cash, Home Depot's new pro division, it's already making money. It's in the black. We're talking a positive operating margin of almost 2.5%. That's huge. Now flip the coin, Lowe's is a completely different story right now. Their new acquisitions are still deep in what you'd call an investment phase. And what does that mean? It means they're operating at a strategic loss, over 3% in the red, while they're still figuring out how to plug all these new, complex businesses into their main system. And the research from HDIN really nails this point. I mean, it couldn't be clearer. You have one company already reaping the rewards of its big bet, while the other one is still paying the hefty price of admission. All right, let's pivot to the next battleground. Because when you can't just grow the top line, you have to fight an internal war, a war on inefficiency. And the weapons they're using? You guessed it, AI and automation. And this part is actually really fascinating because it shows they have two totally different philosophies. Think of it like this. Home Depot is trying to build a smarter human. They're using AI to handle the boring stuff, they call it detasking, so their employees can focus on higher value work. Lowe's, though, they're betting on this smarter machine, pouring money into hardware and robots to just replace those manual tasks completely. But for Home Depot, this isn't just about saving a few bucks on labor. The real goal, the big play, is to weave their technology so deeply into a pro's daily life that leaving becomes almost unthinkable. It's about creating what you'd call extreme customer stickiness. And their Blueprint Takeoffs tool is the perfect example. Get this. A contractor uploads a complex building plan, and an AI reads it and instantly spits out a complete materials list and a price quote. I mean, this is an absolute game changer. It saves these pros hours, sometimes even days, of mind-numbing work. And just like that, Home Depot isn't just a store anymore. They're a critical partner on the job site. Okay, next stop, the supply chain. Because in today's crazy global economy, it's not enough to be good at sales and tech. You have to build a defensive moat around your business to protect yourself from risk. And that's exactly what the supply chain has become, another battleground. And this is another area where the research points to a clear difference. Home Depot has built a much stronger fortress. They're sourcing from all over, Vietnam, India, the whole China and Taiwan region. That gives them a ton of flexibility if, say, new tariffs pop up or things get tense somewhere. Lowe's, on the other hand, is much more dependent on just China and Mexico. That means their risk is a lot more concentrated. It's a bit more fragile. So, after all that, after the market freeze, the fight for the pro, the tech race, and the supply chain strategy, we get to the big finale, the verdict. How are these two giants really positioned for what comes next? For that moment when interest rates finally do shift and the whole economic engine kicks back into gear. Before we get to the final verdict, there's one more crucial piece you have to understand. Home Depot has this secret weapon called its MRO business. That's maintenance, repair, and operations. And just think about it like this. You might decide to wait on that kitchen remodel, right? But a hospital, they can't wait to buy light bulbs. An apartment building can't wait to buy cleaning supplies. These are essentials. And that business gives Home Depot this incredibly stable, recession-resistant stream of income that Lowe's just doesn't have at the same scale. And this really sums it all up. You can think of Home Depot as the heavyweight champ who's built for resilience right now. They have these profitable pro and MRO businesses that are letting them just weather the current storm. Lowe's is more like the hungry challenger, with huge potential for a massive rebound tomorrow. I mean, if all their big bets on acquisitions and automation finally pay off, the upside could be enormous. So that leaves us with the ultimate question, doesn't it? As everyone in this industry holds their breath, waiting for the economic winds to shift, which approach is going to win out? Is it the fortress, built to be indestructible in the middle of a storm? Or is it the agile ship, built to catch the first gust of wind and ride the coming wave? The answer to that is going to write the next chapter of this incredible rivalry.